Good morning, sunshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with free care. There's no second best, okay?
GM. GM. Trade of the day. Wednesday. 18th of September. So, going into the Fed meeting and the rate cut expectations, how are we looking? Well, I want to compare some of these previous moves and how the open interest build-ups were in comparison. You can see over here, just looking at OI, from when we made new lows until we made new lows again. So we had this move here and we had this move here in particular. Between this low, which was around there, and the next breakdown, we had a significant build-up of open interest, 20% OI build-up, 32,000 contracts as the market was rising and as the market was falling. And then we pushed and made a new low, which flushed out a lot of that positioning. We then rallied up again, came all the way back down. So from the lows in open interest over here, after that move, and then the second retest, which took us all the way down to there, we bottomed out in open interest in the 9th of July. And the build up until the breakdown point was, again, another 13% or 21,000 contracts. So to me, both of these phases here throughout May and June was the market betting on the bottom being in. It was wrong. Then we had the Trump rally and the Trump assassination attempt. And we had Bitcoin moving from 53 up to 70 as we had the Bitcoin conference. And again, the market was broadly betting on the bottom to be in again. That got flushed out once more. And then since these lows, these most recent lows, we have another build-up, significant build-up of open interest, 24%, 36,000 contracts. However, to this point, we have something different happening. We did not make a new low. We came in and formed a higher low at the same retest level as we had at the start of July. And we've broken structure to the upside bullishly. Still early, right? The biggest proper confirmation on this chart is 64K on the weekly. So when Bitcoin closes a weekly candle above this red weekly, when Bitcoin closes a weekly above there, that's when your strongest confirmation of continuation is set and that we will go higher. So obviously until then, downside risk still persists. It's still absolutely possible that we see the market drift lower. But we have had a slight change in character here to this point, where we had made new lows after significant build-ups. We had made a new low after a significant build-up. We now have a significant build-up and a failure to go lower, which means the market might finally be priced in to the downside, and we might actually have to see a unwind of short positioning. Because essentially, if this is not able to make a new low below 49, this positioning to the short side is wrong, especially as we go higher. And so if Bitcoin is able to make its way above 62 and 64, you're going to see a lot of this, 36,000 contract buildup being closed to the upside. So the fact that this was unable to make a new low and has potentially made a higher low while there's a buildup of open interest puts the shorts on the wrong side of the market if we keep rising. So that's a potential positive catalyst, especially if we continue to go higher. So that's something that I notice and see as being a potentially bullish catalyst. It's as simple as, if we assume there's still going to be more bull market and we go to 70K or we at least test the all-time high or whatever, betting on the lows being in, May, June was too early, July, August was too early, and I think people are again betting, well, it's not going to be September, there's going to be one more push. Market tends to get like this where it wants one more push when there's not really a need for that to happen. Of course it can, anything can happen, but cautiously optimistic here that we might see this market go higher rather than lower. So what are we looking at here? What are we looking at next? Well, going into the rate cuts themselves, you want to just focus on the lower time frames. So Bitcoin has left behind some untested areas here, untested areas down to whereabouts. So we moved up, retest, slight little gap over there, an order block down there. To the downside, we obviously have this main one, which was at about 56k. That breakaway has not been retested. Below there, everything's pretty much been retested. We moved up, retested that, we moved up. There's a slight gap left behind around 54, which you could look at. But equally, there's plenty of untested areas on the upside as well. So if Bitcoin goes down, I would say the lowest you would want to see on any kind of spike would be down to around there. And if Bitcoin holds in this area, that's a good sign. If we lose this 58k area, that's where I would see it going lower. And at that point, it could go to new lows. So 58, which also aligns with that previous pivot that we talked about. This seems to be the most important area to look at for the market. Obviously, to the upside, we've got plenty of gaps above, all the way up to 64. We've got untested breakdown levels from all the way up at 70. So if the market is ready to shift into a bullish trend, there's plenty of areas to target above. And for me, 58 is where the pivot is already sitting, but also on lower time frames, it correlates. And so today, during the rate cut, you can see a spike down. I am sure there's going to be a spike in both directions. This is just what happens, right? If we go back to the 31st of July, we saw something similar. 31st of July, we had the market in a bearish correction. Before that, we then had the Fed meeting, breakdown, and that actually still hasn't been retested. So the 31st of July meeting has not been retested, this area from the last Fed meeting. If we take this untested little gap over here, you can see where we are currently sitting at. This has all been untested since July 31st, where we broke down, and since then really the market has been trying to price in bearish outcomes. I think that's a logical target to the upside. If we start to break above 62, I think we can go towards 66. And how to trade it? I don't have a particularly strong opinion on the actual cut itself, other than the most simple logic, which would be if they cut once, 25 basis points, probably the market will take that to be slightly bearish, because the market seems to think that the Fed are slow. If the Fed are slow and they cut once, it's probably a sign that they might be behind the curve. If they cut twice, 50 basis points, I think that's the ideal outcome that the market's looking for, and it will probably react most favorably to that. And if we see 75 basis points, 3 rate cuts, again, I think the market might initially pump off that, but take it probably to be a negative, because cutting 3 times right away, it could be a sign of panic by the Fed, that they think they're actually way behind. Now, the futures markets are not pricing in any chance of 3 cuts today. That is something that has only come up in the last few days by some senators asking Powell to do it. So I would put a very, very, very high probability on it being either 1 or 2, either 25 or 50. The Fed don't tend to overreact. If anything, they underreact to these type of policy shifts. So we'll see how that goes. And obviously, like to the upside, it's really simple. If we start to clear out above 61, 62, you've got just pretty low volume gaps all the way up here. Price not spent much time there. I think price can move pretty quickly from 62 towards 66 if it breaks above. Now, if we see a crazy pump off the Fed decision today, that's something that you also need to be concerned of. Don't go chasing in to these like FOMO pumps, because that's going to leave behind a lot of inefficiencies for the price to come back and fill later. So the best scenario, the best outcome, I would say would be something like this. I would think the absolute best outcome would be dropping back and then holding and consolidating and continuing to build a base before breaking out higher towards the end of the month. Do I expect that to happen? No. I think the market's going to move however it's going to move. But we'll have a clear sign of that. We'll have a pretty clear indication of that heading into today's meeting and after it. So I'll be live for that, of course. Gaps to the downside, 59.385, 58.125. Those will be areas to expect a wick to rest at or stop. Of course, if it gets down as low as 58.12, don't be surprised if it continues down to where these stops will be resting. There's going to be some longs who've longed into this uptrend, with stops sitting down there that can easily get touched off. But a lot of that is short-term noise. And from a kind of sentiment perspective or a general just market psychology perspective, sudden sharp pumps are not necessarily bullish. Sudden sharp dumps are not necessarily bearish, right? You almost want to see the opposite of what you think should happen around the cut itself. So if I want the rate cut to be a bullish rate cut, I would prefer to see some downside before the meeting or during the meeting. And then, of course, it retraces and rallies after, because that would indicate that some shorts have been piling in and that some longs have been getting stopped out, which is actually good for the future prospects. If you just pump straight away into the meeting and after it, it leaves behind all these gaps that we can come back and revisit after. I'll show an example of that from December. The Fed, where I think it was the 13th. I'll just double check here. Where the fuck? Oh yeah, sorry. Should be on here. The Fed meeting back in December 13th. Yeah, it was. Look over here. December 13th. We had a dump 2 days before. We had a big pump into the Fed meeting itself. That was when Powell came out and said, we're going to be cutting rates next year. That was when the market really started to price in this bullish future path. And what happened? We spent a month really consolidating within that. Very choppy, very sideways, very uncertain. And we pushed into the ETF launch, then all the way down. But the long run implication of that was a bullish one. So it does not have to moon or go to zero today. It's much more likely to have a volatility today, and then over the coming days or weeks, you'll see more of a directional move after that. But be ready. Have your levels set. If you're going to trade it, make sure you've got a system tested to actually trade today. If you don't, just sit back, do nothing, watch it happen. Don't. It's going to be wild. There's going to be spikes. There's going to be craziness. Everyone's going to be like, holy shit, we're pumping. Holy shit, we're dumping. Just sit back. Don't overreact. And it'll be all good. See you at 6 p.m. GM.